I'm going to talk about your most recent activism event, or if you made some money, whatever. But so far, it's going to be foolhardy activism. And if I live rent free in your head, please let me know in the comments down below. Leave a like or dislike on the thing, and subscribe. Because I know you're going to come back anyways. Okay, now that I'm living rent free in your head, I'm going to kind of explain my reasonings and why I think you're wrong, and that I think that GME is gonna not end well, according to what Michael Burry says. Personal opinion out of the way. I think this is all hilarious, but I think there's a lot of misconceptions about short selling and why it exists and stuff like that. And I think that what happened with GME was a repealment within the Volcker rule back in June 2020 or so. Essentially, what they could do is they could create artificial shorts. Before, when the Volcker rule was put in place after 2008, they had it so that they had to find those shares to be able to short. Whereas the repealment of the Volcker rule within that Dodd-Frank Act, it specifically kind of was retailored to the point where if they can reasonably expect that they can acquire those shares, they can essentially artificially create that short for you and give you those shorts. And if they don't, right, like if they don't aren't able to allocate or locate those shares, they are kind of screwed. They're having like certain liquidity issues and so forth. It's a whole like chain of events that where you literally have to study a lot of finance to really understand it. But essentially, they're loaning it to people to short sell and stuff like that. But it doesn't actually exist because no one has actually lent them those shares, and because that person still hasn't lent them those shares, they can't square out their books, and therefore it creates a second set of shorts, and that's how you get over 100% of shorts. That's kind of the skinniest and easiest explanation I can give to you. Also, in conjunction to that, shorts are not a bad thing. It's like fire. Fire is your greatest frenemy. Fire is bad because, oh, fire hurt. Fire like burned down buildings and stuff like that. But fire also forges the steel that builds that house. Fire cooks your food. Fire keeps you warm. There's a whole slew of benefits. So essentially, it is kind of a frenemy, and that's also kind of how shorts should be kind of viewed. They are also your frenemy. Even Warren Buffett, one of the biggest, long only kind of portfolios out in the world, and the most excessive one at that, likes shorts and sees that it creates market balance. And what I mean by that is that other than price discovery, which I'm not going to explain here, you guys can look that up yourself, it creates accurate pricing, and it also helps with fraud. It helps weed out fraud. Nikola went up to like what, $80, $90 or something like that, and everybody was like all enamored by Trevor Milton. Yeah, they didn't realize that he was trying to essentially bait Robinhood investors into investing in his company to essentially try to pump it and then dump it. Now, of course, like he kind of oversold himself and kept talking about like HTML supercomputers and stuff like that. And I'm like, so your supercomputer AI is running on HTML, the stuff that builds websites with that doesn't have that type of logic. None of it really adds up, right? And that's kind of where short sellers kind of help the market because like, can you imagine buying Nikola at $120 and then finding out that they have no trucks whatsoever? Everything, it was just like an empty box. It was essentially a pusher coming out of the gates. Um, like what are you supposed to say? Would you rather lose at $90 or would you rather lose at 120, 180, or whatever it balloons up to, right? To the point where everybody's fully invested in it, similar to what's happening going on in GameStop right now. Now, I thought people would have learned that this is kind of GameStop's MO, where they sell you something full price and then they buy it back from you for like, a tenth of what they sold it to you for, and then they resell it for like double of what they bought from you at. But I guess I was wrong in that situation. But the thing is, I think a lot of people are leaning into the wrong thing, which is mostly originally what was Michael Burry's analysis of it, which was the consoles still had disk drives. Now, here's the thing though. If you only do, let's say GameStop only sells like 10 units a month or something like that, right? And Best Buy does like, let's say 1,000 units. Why is GameStop worth more than Best Buy? Best Buy sells a lot more things and does a lot more sales than what GameStop does. It makes no sense, at least in a logical form of view. Like you can feel all your way the way you want, all you want, but the reality of it is that Best Buy has earned its price market at like $80, $100 or whatever, right? GameStop at $100 right now doesn't make sense. $450? No, still doesn't make sense. Where are you guys getting this logic from? Just because you're trying to take a personal stance against not GameStop, but like the hedge funds? You're gonna lose if you're gonna try to stand against them. That being your logic and reasoning. So this is going to be the technical portion, a little bit further in depth. Obviously, I did a little light bit of research. Short selling isn't my main game, but you know, honestly, you can debunk a lot of these things with just a modicum of research and to see how much of a disadvantage you are at. So this is a website, shortsqueeze.com, and I see a lot of people use this and talk about like the short squeeze on this or whatever and so forth or whatever, right? Or on like FinViz, whatever site you get it from. I don't care. They all reference like relatively around the same number, and 30% isn't 130%. And you know, you think that they have to cover that thing. They don't have to. You don't know what their actual in price is. You don't know the total amount. You don't know what kind of capital is hidden behind there. You're essentially trading in the dark. And actually, let me move myself over to the right so you guys can see the website. So you guys are essentially trading in the dark. And these guys, they have a lot more money behind them than you really think. They've been doing this for a very, very long time. And on top of that, they have a higher amount of leverage than you will ever see in your own life, even if they're trying to short sell against you and stuff like that, right? Now, I'm not saying institutions aren't in on this game too to kind of go long GameStop and screw other hedge funds, because that's kind of the game. Like, they are in this business to make money, whether it goes long, short, whatever, right? If it makes money, they're going to adapt and actually play it in that direction. To think that they only go one-sided is actually idiotic. And honestly, they're not going to hold this for very long either. There's going to be a point where they're starting to sell, and I would imagine this whole quick spike up back again, the second attempt, is likely the time that they're probably dumping a lot of the positions. They're not acquiring, as far as I could tell. It'd be very idiotic if they were. Probably they are probably doing this the same way that most people are. They should, risk management wise, where they're putting a small amount of their net gains back into it, but not the full force, or like not doubling down, not doing any of those idiotic things that people think that, this is their one ticket to become a millionaire. It's not. Like, there's a high probability that this will end really badly for all these people who have dumped their life savings into that. I have a lot of opinions on that, but for the sake of time, I'm just going to move over to FINRA's website really quickly. And if you guys look at the understanding short sale volume data on FINRA's website, et cetera, right, you guys can read through this on your own. But a couple things that did stick out to me when I was reading this thing was number 5 here, where it says the trade between the firm and its customer may be reported to FINRA for regulatory purposes, but is not publicly disseminated. And then to further that, it says FINRA notes that even if the short sale volume data were consolidated across the exchanges and FINRA, it would not eliminate potential confusion discussed above, created by the short sale file only capturing publicly disseminated trades. There are daily and there's a monthly one. The monthly one is the important one because that's for regulatory purposes, or reg show, or whatever you want to call it. Now, because they worded the way it does, a lot of people in finance are edgelords, so they won't do something if they don't have to. And this is kind of one of those things where they don't have to, because they can hop on an alternative exchange, or otherwise known as dark pools, and make trades off of there, doing short sales, whatever the hell they want to do, without actually having to disclose it to the public until they're actually done. And there's a lot of carry time in between that when and before they actually have to report that. I'm going to move over to the NASDAQ trader. This data is also displayed on FINRA's website as well, around here. Same thing, they show you the daily as well as a monthly data report for whoever's short and whatever they're short on. Here's the thing though. I'm trying to show you the timeline of how much you're delayed, and it's up to 2 weeks, and I will show you. So the most recent one was on the 26th, and if I'll pull up my calendar over here. So the 26th was on Friday, so the past Friday that we just had. So that's the date where they have to finish all their trades. So everything that they have to do has to finish on that date, and they have to settle that. They don't have to report this until the 2nd, and that's by 6 p.m. You can surely bet a lot of people like kind of forward this data at the last possible minute. I mean, look at the 13 FHRs. They take 45 days before they have to disclose it, or before they have to file it. But so on the 2nd. So basically the following week, a couple days afterwards, not too bad or whatever, right? So the following week, yada yada yada. But if you look at the dates, it says 3/9 is when it's disseminated. What that means is that that's when you, as in the public market, get this data. So you get that on the 9th right over here. And that's only aftermarket. So you can basically, if you guys don't have aftermarket trading or anything like that, you guys can basically consider it on the 10th. 9th or 10th, whatever. It depends on your situation. I don't know what your situation is. But if you look at the timeline, it's almost 2 full weeks when you actually get the data of where they were at 2 weeks ago. If you guys don't think that's a disadvantage to not get up-to-date information right there on the spot, then you are absolutely foolish because they have 2 weeks to move, and we just had a end of month rebalance because people can institutions typically move their positions, especially if they were trying to rebalance their entire portfolio. They can do it at the end of the month, or especially specifically at the end of each quarter. Now, they don't have to if they really believe in the position, but for the most part, for something like this, where they actually have to be active on their toes and stuff like that, I don't think they're sticking around for very long. I think they made their money or are making their money right now and just exiting as much as they can. That's just a theory, but it's up to you to really make that determination yourself. But if I had a 2 week advantage, thinking that people are going to give me the liquidity I need for the next 2 weeks, thinking that I'm going to be helping them, push the stock even higher or something like that, they're sadly mistaken. There's a concept out there called wisdom of the masses. And what it is basically a bunch of them will come together and share collective experiences and then improve upon each other, and it can become a very strong unified force. However, in this situation with GME and Wall Street Bets and everything, I'm not saying that they're dumb or something like that, but I'm just saying that yes, I will agree that they do have some semblance of how things worked, but not from actually reading a lot of their filings. Some of them have, some are actually reading up on market structure, which is amazing. But I think what it was is mostly people are learning mostly via like how a neural net learns. When one fails, the rest of the collective learns from that and then learns not to do that and then tries other methods and other means until they actually latch onto something's working. However, the problem with that is that I think a lot of people just are caught in that notion right now. We got to short squeeze this, we got to short squeeze that, that they are disaggregating their focus because there's a lot of money out there. There's a lot of great plays that can be found, but everybody's all hooked on the short squeeze situation now, which, there are sometimes it'll work, sometimes it won't. In one case that it worked, it doesn't mean that all the preceding cases are going to work. You look at AMC, Nokia, BlackBerry, etc., etc. I'm not in opposition of it. I'm just saying that, I don't think they fully thought out exactly how this works and are very accustomed to these types of like cycles that we have to go through. I'm not here to hold your hand and I'm not here to coddle you. I'm not here to, whisper sweet nothings into your ear that you made the right decision or anything like that. I can't do that and I won't. The thing is, the reason why I'm telling you this is because I'm trying to let you guys know that I'm not doing this from a bad place. I'm trying to come from a good place, but the problem with it is that there's no way to shake you out of that whole fanatical feeling that, you're taking it to the man or fighting against hedge funds back in 2008 and stuff like that. There's no way to really teach you that. You have to experience that yourself. I can try to like steer you away from the heartache and losses and stuff like that if you want to listen, but most people won't listen, and I can't do anything about it. I tried, and I don't really lose any sleep overnight. I definitely don't lose any money over it. But at the end of the day, you have to make your own decisions. But yeah, that's all I have. And the only last thing I want to leave you guys with is that I just want you guys to know that just because you're a day trader doesn't mean you have to trade every single day.